How's it going, everyone? It's Sam. I am going through what I bought today. So I bought NAT stock, I bought DHT stock, which is another tanker stock. I also bought Berkshire Hathaway, and then I also bought some Realty income. So I appreciate it, guys. Please watch through to the end because it might kind of inform how you're looking at your investments going forward. It might back up what you've already done and make you feel really good about it. It might change slightly how you're looking at investing in the future. So I think it's definitely worth going through to the end because I'm going to give you some nice statistics today that might inform your decisions going forward. So first of all, I just want to say thank you to all my new subscribers. Thank you for everyone that has already subscribed and that is watching the videos. I really appreciate it. I see that most of the people watching them still are not people that have subscribed, but it really means a lot. I've gotten up to 216 subscribers, and a lot of them have just been in the last few weeks. I mean, I made videos for years before this, but they weren't like the ones I'm making now. I'm putting a lot more effort in, trying to really put out the best information, and I appreciate you guys all watching and subscribing. It really does mean a lot. I didn't think that I was going to be able to get to this point, but hopefully I can keep on growing moving forward. So as you may or may not know, for every new subscriber, I am putting $5 more into an investment account, whether it's in Robinhood or M1. I am investing in those two primarily outside of my employer retirement accounts. So for every new subscriber, if you're not subscribed, please hit subscribe. It really does help. Please hit the like button. Been able to get a lot of likes, which definitely helps out the channel too. And yeah, I just really appreciate it. It means the world to me that you guys are watching these. So just from Friday, I invested more several times last week because I got new subscribers, and I had invested just Friday, and we gained a ton of subs over the weekend. When I checked this morning, we had 216, and I was at 173 last Friday, so I am investing another $215. And if you don't know, I'm not trying to do this just for clickbait. I mean, sure, it helps and it's a little bit exciting, but most of it is to help me dollar cost average into this market because it's hard to kind of keep your head on straight when you see prices drop. And that is something that initially when the first drop came from everything that's going on right now, I threw a lot of money in the market. I just want to steadily invest over the next few months. And also I think it's cool because you get to see a growing portfolio, someone that's investing more in the market. If you have money that you want to invest, then you can come here and see, okay, Sam bought $100 yesterday, what should I maybe think about investing in? Now, I'm not a financial advisor, so take what I say with a grain of salt, but I am just showing you what I think is a good value and what I want to be invested in. So right before I tell you what I bought and how much I bought, I do want to give you a little background on the portfolio. I have a M1 Finance Roth IRA, which has over $10,000 now in it. It's about $10,400 or $10,500. And then I also have a Robinhood portfolio, which I started with my stimulus check just to try out the platform and try to build some monthly dividends, get monthly checks from my stimulus check instead of just one lump sum. I have been investing in both of those. They're primarily for just capital appreciation through growth, but I'm also using dividends because in this down market, there are a lot of stocks that I feel like are really good values that have dropped significantly, and either they suspended or cut their dividend and they'll bring it back here in the next few years or year, or they just present a really high dividend now. So I think you can definitely take advantage of some of those because their stock price dropped so low and they still have good cash positions and good cash flow. So I've been looking at investing through those because if I can lock down a 7 or 8% dividend, that's great. Of course, there is no guarantee that they will keep that dividend, but that's something that I'm willing to risk. Now, some of these stocks that I bought today, I didn't put a ton of money in. I invested in 4 stocks with $215, but the principles are still the same. Whether you're investing $10,000 at a time or $200 at a time, if you have good investing principles, it should be good for you. Now you have to account for your risk tolerance, how much money you make, what are your goals. So if you have $10,000 to your name, I wouldn't invest it all in NAT stock, but you could do that. I'm just saying that that's not something that I'm willing to do at this point in my life. So take all of that into consideration when you're investing. So before I talk about how much of each of these stocks I buy, I do want to say a couple days ago I did make a video about how DHT might provide a better value than NAT stock, but I believe that both of them offer good value. DHT is a little bit cheaper, but I think NAT, like I said in the video, has a lot of eyes on it. So if they come out with some good earnings, they are gonna do really well because they are kind of the spotlight stock. So I did buy both of them today because I did want to diversify into DHT, but I bought some NAT also. So if you have any questions on that, feel free to leave them below, I'll answer them. So the first stock that I bought today was NAT. So that is Nordic American Tanker, and I've talked about them 5 times, maybe 4 or 5 times recently in the last week, but I'm still really excited about the stock. I bought them last week for $5 a share. So today they are right now $4.95. It might change by the time you watch this, but I bought them for $4.98. I feel like they're still a good stock. Nothing has really changed since Friday or Thursday, so they're still making great money, right? Nothing has come out that they are making less money in the last few days, nothing that I've seen at least. They still have a huge supply of oil. They still have little demand for oil, so there's a lot of demand for these tankers to store all the oil. So they're still making a ton of money. They have dropped significantly, so they've dropped 45% since their highs of about $9. And I was able to buy more today, even a little bit cheaper than I did the first time at $5 a share. I think that we're probably going to see net income between $1 and $2 per share. And they've really decreased from when the CEO went on Mad Money and talked about how much money they're making and how expensive they are. So I think a lot of people sold out, and we're at a pretty good stock price now. It's stayed steady right around $4.90 to $5.30 or so over the last week or so. So I think they present a good value still. I think that there's still not going to be a huge demand for oil and for gas over the next few months. I think a lot of people think the reopening of the economy will go really smoothly, but I think we're gonna have to be careful about it. We don't want to have a spike in cases again. And if we have any kind of increase in cases, first of all, it's going to be detrimental if we reopen the economy and we have to shut it down again. But I think it's more likely that we would just open it slowly if we see that happen, because I think it would be too significant if we have to shut down again. The government won't want to do that, I don't think. So I think that they will slowly reopen, but that's really going to draw out the process of using up all that oil. So I think they'll make a lot of money. Now, I've also talked about DHT, which is another oil tanker stock, and they didn't have quite the hype that NAT had. They didn't have their CEO go on a TV show and talk about how much money they were making. They didn't have a bunch of finance YouTubers cover them. So they never quite got to the point where NAT got, where they went hundreds of percent above their value before all this started happening. So they are a good pick. I think that they're really solid. They're really similar to NAT in what they do and their size. But I think that they never had that price fluctuation that NAT has. They're not the brand name tanker stock, so they have less price fluctuation. They had really solid earnings last week. I think that they're going to pay great dividends again, just like NAT. And, I didn't invest a ton in either of these. I will say that. I invested about $50 in each of them, and that's just something that I'm comfortable with. I had already invested $100 in NAT. My thinking is I can make some dividends, and it's more testing the waters. So I don't invest in options or anything like that because they're riskier and because I'm just not comfortable with it yet. But if I can make 5% or 10% or 20, 30, 40% in this with $200, you might be comfortable with options. You might be able to make 200, 300, 400% in options when I make 20, 30, or 40%. So if you're comfortable with that and you look at these, you invest in them, you feel good about them, and you get that return, that's great for you. That's just something that I'm not willing to do yet, but maybe you're investing thousands of dollars in their stock. I know tons of people that have commented that have been investing way more than I have, and they're really confident about it, so that's great if you can do that. The tanker stocks seem like they have popped, so this is a better spot to get in, I think, than just a few weeks ago when they were up almost twice the price in NAT and about 33% more expensive in DHT. So definitely take a look at those if you haven't bought them already. They might be a good solution for you if you're looking to get into some kind of oil stock or tanker stock. So definitely take a look at those. Now the next stock I bought was Realty Income, which I didn't buy a ton of them, but I bought about $40. So I think that they are a great company. They are known as the monthly dividend stock or monthly dividend company. So every month they're paying into your pocket They have a really good dividend right now of over 5%, and they've been able to grow their dividend consistently. So they've grown at about 4.4% a year over the last 5 years, and they've been paying this and growing this dividend for 26 years. So they're what's known as a dividend aristocrat. They've been paying and increasing their dividend for 25 years or more, and they're paying about $2.80 right now a year. Now, they've also been able to increase their revenue and their net income over the years. So they're becoming more profitable each year. And this is important because if you are increasing your dividend, right, you're increasing it every year, but for some reason you're not making as much money, or maybe you're staying stagnant, that means that you're paying out a larger and larger ratio of what you make every year to your investors. So that means you have less money to reinvest in the business, which can be difficult over time because that means that you're kind of going downhill. You're paying more and more and you're making less and less. That's not a good solution for a long-term investment. So I think that they show a lot of promise. They keep on going up. They keep on increasing revenues and increasing their payout. So I'm really excited to invest in them. I think that they're a good price. They've come down a lot since their highs earlier this year. And, selfishly and mentally, you gotta love that monthly dividend. So it's nice to see that hit your account. But I invested in them today. I also invested in a company that I talked about in a previous video, which is Berkshire Hathaway. So a lot of people got freaked out a couple weeks ago when Warren Buffett said they dumped all his airline stocks. Now, a lot of people took this as a bad sign, a lot of people took this as a great sign. I think of it as trimming the fat. So Berkshire got rid of a ton of money in these airline stocks, but for their portfolio, it's not that large. So like if you buy a 1 pound steak and you cut off, 10% because it's just fat, then you put the rest on the grill, you're not pissed about that. You're happy that you have the best of the best now. It is a quality cut, and you're not annoyed that you bought it for 10% more because it's going to be a great value anyways, right? So you are doing the same thing in Berkshire, in my opinion. You bought it, and maybe they sell some of the airlines. They sell 5 to 10% of their market cap out of the airlines. Well, they trimmed a little fat, but they're still a great company, great quality. They still are making a ton of money. They still are a cash cow, right? So they still earn a ton of money. And they have such a wide range of investments, whether it's just the companies that they own outright or the parts of the companies that they own. So they own large positions in a ton of different companies, and then they also have a ton of cash. So one thing that is a hindrance right now is the fact that the government is helping all these companies, right? So they have been providing so much stimulus and so much assistance that Berkshire hasn't been able to do what they normally do in recessions, which is to help out a lot of companies and maybe take positions in them to help them out short term, but then they get massive dividends or they just gain a lot of interest in the company, a lot of ownership. But I will say there's only so long that the Fed and the government can do that, and they can only do it for so many companies, right? So they can't provide enough money for every company indefinitely. So I think Berkshire eventually will be able to capitalize on it. They haven't been buying much stock right now, if any, really. They said they haven't bought much stock. So I think that there's still a scenario where they could be able to take advantage of this downturn. And if not, they're still just going to earn a lot of money. They have a lot of cash. They're going to spend it at some point, right? They're not going to hold on to $500 billion in cash and be worth $700 billion. So I think they're going to invest it at some point, and at that point, we're going to get a great value from it. So those are my 4 stocks I'm buying: NAT, DHT, Berkshire Hathaway, and Realty Income, also known as O. So I think that those are 4 great stocks. Again, not a ton of money invested, but I think that it's just about consistently growing your investments over time. So maybe you invest $2,000 and I invest $200, but that is where I'm at today. I appreciate you guys watching. Please leave a like on the video, subscribe if you haven't subscribed, and I will continue to invest more and more. And let me know if you have any questions below. Let me know what you bought NAT at, especially because a lot of people have been telling me, and I'm always interested in hearing what people were thinking when they bought at certain prices and where they think that will go in the future. There's no way of knowing, but we're all just doing our best out here. So I appreciate it, guys. Thank you very much for watching, and I will see you in the next video. Bye.